Assalamualaikum warahmatullahi wabarakatuh. My name is Muhammad Imran Hanafi bin Muhammad Noorman, and today myself and my group will be presenting about Islamic social finance, and we choose fintech, and the country that we choose is Qatar. So we will be presenting about the fintech in Qatar.
And today me
Bismillahirrahmanirrahim. What we need to know first, in order to get more knowledge about Islamic social finance, why not we go to the introduction of Islamic social finance. The Islamic social finance sector broadly comprises the traditional Islamic institution based on the philosophy such as zakat, sadaqah, and waqaf. Those based on the cooperation such as qard and kafalah. And the new Islamic microfinance institution aim to making a dent in poverty. The Islamic social finance refer to the financial practice that are based on Islamic ideal and meant to help society. For over 1,400 years ago, Islamic social finance strategies have been employed to elevate poverty and promote socio-economic growth. Zakat, waqaf, and charity or sadaqah are example of Islamic social finance mechanism that have been used outside of the Islamic community to achieve this. Islamic social finance is still used today because of systematic relevance in finance, and in the future, this system of finance will be employed and grow in the important to the point where other non-Islamic countries will adopt it. In the modern world we live today, there are some technological advances in Islamic social finance that can be used, which is called fintech. Fintech is a term that used to describe technological investment in Islamic social finance that can be employed in today's modern environment. Fintech, for those who don't know, is the application of disruptive technology to traditional financial services in order to gain cost, time, and system efficiency saving. Okay, without wasting more time, now we go through to the development Islamic banking in Qatar. Starting in the year of 1982, Qatar had introduced their first Islamic banking for the first time, that was called Qatar Islamic Bank, or it can be called QIB. Qatar is one of the earliest countries that introduced Islamic banking to their country, and that's why we can see their Islamic banking more advanced compared to the other country that has just introduced Islamic banking in their country. The performance in developing Islamic banking in the past few years was very amazing. According to the Qatar Central Bank statistic of December 2017, the asset of Islamic Bank in Qatar in December 2017 amount to 352.2 billion Qatari Riyal, up from 322.9 billion Qatari Riyal in 2016, representing a growth rate of 9.1% and accounting for 26% of the total asset of the banking sector, which is commercial bank in Qatar. In 2017, this amounted to 58.2% of Qatar nominal GDP.
Assalamualaikum warahmatullahi wabarakatuh. My name is Muhammad Imran Hanafi bin Muhammad Noorman, and I will continue on the implementation of fintech in Qatar. In Qatar, since the COVID-19 happened, there is a new era in the business condition, which is mostly driven by the COVID-19 pandemic, which has increased the technology adoption across the entire business in the country. Both public and the private sector seeking to intensify their tech-based solution to meet and increasing demand from their constitution and country. They also want to take the advantage of this emerging opportunity in the many areas. Almost all majority banks in Qatar accept internet and mobile banking solution, as the customer and user intention nowadays in using the digitalized channel has increased drastically. Since 2020, the number of transactions made through digital and online transaction has risen sharply. Not enough with that, the blockchain and other new technology have massive prospect to play a big role in Qatar overall economic transformation, especially in the digitalized of many services such as government to citizen, business to consumer, government to company, and business to business. Other than that, the blockchain and new other technology have massive prospect to play in a big role in Qatar overall economic transformation, especially in the digitalized in many services such as government to citizen, business to consumer, business to company, and business to business. Next, I will move into the four primary drivers of the implementation of fintech in Qatar. To begin, there is access of opportunity. This is due to a large number of users of e-commerce. Online transactions have been implied throughout the country. Next, we have the favorable regulation. Recognizing the importance of a clear and supportive regulation policy for the growth of fintech, the authority have reinforced the regulatory environment to assist the fintech in founding themselves and doing well. Thirdly, we have the talent availability. Qatar have many local skills and a strong local infrastructure thanks to its large and well-established financial institutions. And last but not least is the capital access. The Qatar Development Bank, or known as QDB, enables investment through its 365 million Qatari Riyal venture capital fund. There is a lot of possibility for other countries to provide fund too.
Hi, Assalamualaikum. I'm HAKEEME Imam Abdul Latif, and my presentation is about current issues in Qatar. So, first point is human error. According to many security professionals, is the greatest threat to data privacy and security. Employees that are ill-informed or clueless can use weak passwords, destroy data by accident, fall for phishing schemes, have privileged account access, and surf websites that are not permitted. Even if that fintech provided high-level security or trust mechanisms, there is a significant risk that their privacy will be accessed and disrupted, whether that access is legal or illegal. Although government interference into consumers' privacy is not at the top of their list of concerns, it does spark heated debate. Next, we have synthetic identity fraud, falsifying personal information. The most common type of fraud we see in fintech lending these days is synthetic identity fraud, which involves criminals falsifying personal information. Fraudsters can now easily obtain personal information such as phone numbers, addresses, ID proofs, and images from social media sites that contain the majority of customers' vital and susceptible data, as well as the deep web. Even though Qatar is a developed country, fraud and authenticity issues are common, especially involving finances. Another concern fintech innovation in Qatar is the possibility of behavioral manipulation. The same technology that might help customers better manage their finances and habits can also be used to encourage overspending, borrowing, and the usage of inferior or more expensive items. Providers will have vast amounts of data on people, will know a lot about their lives and personality types, and will have tools like human-like voice assistants and entertaining chatbots that give interactive advice. The same methods that can help people save instead of spend might also cause them to spend instead of saving. Move on to the next point is blockchain integration. The transactions are still only carried out with the approval of high authorities, and users must wait for confirmation in their favor. This is the first difficulty that blockchain has to overcome in the fintech industry. Users have no idea what's going on the other side of fintech applications when they perform any action. This causes a lot of uncertainty and increases concerns about identity theft, which leads to a loss of trust in the system. With its properties of transparency and immutability, blockchain application development services tackle this fintech challenge. AI and big data. AI and big data technologies are already being used in the mainstream banking sector, with the most well-known applications including algorithmic trading, market monitoring, and fraud detection. Big data analytics allows algorithmic traders to trade with a level of flexibility and sophistication that no human can equal. Last but not least, our point is outdated system. Despite breakthroughs in AI and machine learning, the banking and finance industry is nevertheless hampered in its adoption of increasingly complicated models by interoperability issues, outdated systems, and the scarcity of competent personnel. There's also the issue of legislation, which concerns data governance, risk traceability, auditability, and the removal of inbuilt prejudice.
Okay, hello. Now I want to talk about challenge fintech at Qatar. Other than the Sharia compliant dimension that are peculiar to Islamic fintech, other challenges are general to all the fintech in the Qatar. This includes but not limited to funding constraints, especially since the outbreak of COVID-19. Competition from conventional cohorts, regulatory issues, and human resource challenges, to mention but a few. Okay, now I want to talk about 5 challenges that fintech faces at Qatar. Firstly is Sharia non-compliant risk. For Sharia non-compliant risk, a breach of the sequence and quantity of Sharia parameter in a digital contract, a tagging error in the akad that could result in unintended trading in Sharia non-compliant shares, or flaws in the selling capping are all possibilities. This could result in a profit overcharge as a result of a mistake in profit charge computation, as well as a QR issue in the use of smart contract. Okay, second, I want to talk about regulatory uncertainty and impediment. Okay, regulatory risk and compliance management can be difficult, time-consuming, and expensive. Many nations in the region lack regulatory support in the form of sandbox, technical standards, rulebook, framework, and other associated policy papers needed to minimize regulatory uncertainty faced by fintech company. Okay, thirdly is changing competition and competitors. Okay, both competition and competitors are changing at a rapid rate in the evolving fintech industry. In order to improve their competitive event access and contestability, Islamic fintech in the Qatar region is expected to maintain track of trend in innovation and disruption, in addition to guaranteeing continual compliance with Sharia regulation. Okay, now we go to the fourth, which is funding gaps. For a funding gaps, the spread of COVID-19 and the resulting necessity for physical separation to minimize human interaction in financial transactions have bolstered and accelerated fintech's relative indispensability. However, the pandemic has resulted in a significant drop in venture capital investment in fintech, leaving many of them with the challenge of dealing with sudden pressure to maintain operational resilience amid the uncertainty in the COVID-19 economic path and duration, which may stymie their growth trajectory even further. Okay, lastly, we go to talent development and availability. For the talent, because both Islamic banking and financial technology, when evaluated separately, confront challenge with a shortage of required human resource, the combination needs even more. The availability of specialized human resource and domain specialties is at the heart of digital transformation process, and one of the most important criteria of where an Islamic fintech headquarters should be located. Due to the unique nature of Islamic fintech operation, existing talent pool will need to be retrained and reskilled, while effort will be made to attract fresh talent with a talent and enthusiasm for technology combined with a basic understanding of Islamic finance. That's all from me.